From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming September 17th Forex session in the Euro US dollar. As you can see, on Friday we had another move higher in the euro against the dollar and a continued reaction to not only Mr. Draghi's remarks about buying everything he could in Europe, but also to the Federal Reserve and its further quantitative easing. Looking at this chart, it's easy to see that a lot of people were on the wrong side of this market, and I am the first to admit I was as well. But we are now entering an area that becomes very interesting. I suggested that 130 would be rather resistive, as it was the base of this descending triangle that sent us so much lower to begin with. I still feel that that's the case, and as such, even though I think this is probably a positive market, at least until we get to about 135, I do believe that we will have a lot of choppiness. Because of this, I think that pullbacks are somewhat inevitable. There's just too many little areas above. They're going to give little bits of fits. Plus, let's look at the personality of this pair. It's been, are we following? Are we concerned about what's going on in Europe, or are we concerned about what's going on in North America, United States? Because quite frankly, it seems like we're focusing on one or the other in this exchange, and as such, if we get concerned about things going on in Europe, then suddenly the euro falls. Well, now we're concerned about things in the United States. The Federal Reserve easing, of course, puts a lot of pressure on the currency. The question then becomes, with all of the headline risk in Europe and all the things going on, how long will it be before we see the market start to focus on that again? My suspicion is that by the end of this year we will see a bit of a rally and we'll see a whipsaw back down. 135, if it gets above 135, I think that would surprise most analysts. Of course, having said that, so has this move. So quite frankly, anything's possible. But clearly, you can see that there's a lot of noise in this general vicinity. So a pullback would be nice, especially considering, 2 weeks ago we were 650 some pips below where we are now, and that's a pretty big move just a couple weeks ago for the euro dollar. This is a pair that doesn't typically move that quick. So having said that, a pullback's more than likely. If you can get a bit of supportive action either at 130 or 128, it might be worth having it go. Unless, of course, something's going on in Europe, which is entirely possible. But if we just have a nice drift down and some support, especially right around the 128 handle, I would find this an attractive buy. I think eventually, though, we will run into serious trouble up higher. But more than likely, it's not anytime soon. The market is reacting to the quantitative easing out of the Fed and will continue to do so for some time.